So John D Rockefeller was America's first billionaire. That's billionaire with a B. He made his money from investing in oil companies and in railroads. But most people know this. That's not news. Here's what they don't know. He bought massive amount of whole life insurance policies, not only on himself, but also on his family members. You see, back then and even now, life insurance is one of the best ways to grow your money, with the guaranteed cash value for those permanent policies. And of course, with the traditional whole life, you have the dividends that are declared from time to time from the insurance company. So here's pretty much what he did. He bought large amount of whole life insurance policies with the guaranteed growth. And then he pretty much used the policy like an investment vehicle, right? And being his own bank. So if he needed funds to invest in a new business venture, invest in a business, he pretty much would borrow the money or borrow against the cash value that's there, because when you're using the cash value as a loan, you're not getting your own money, you're ultimately borrowing the actual insurance company's money and using your money as collateral. You'll hear some investors that will have stocks will do security lines of credit. So they'll have stocks they can borrow against the actual stock position that they have. But if the market takes a downturn, they may have to sell. Or if they're just trying to sell the assets to be able to invest in that venture, of course, you may sell at a time where you're ultimately losing money. So it may not necessarily be the most advantageous. Borrowing against the cash value that you have in your life insurance policy ultimately allows you to be able to invest in that venture, and God forbid you pass away, you're still leaving behind a death benefit. The third thing is, talking about the death benefit, if you pass away, you're leaving behind a tax-free death benefit. And even though you used money, you took a loan against the cash value, that ultimately you're not paying any taxes on anyway. So here's the big thing. Whole life policies, permanent policies, you have that cash accumulation. You are able to grow your money tax deferred, not pay any taxes as your money grow. You're able to leave tax-free death benefit over to your loved ones. And you have that liquidity in that cash value whenever you need it. Look out for my next video. Like and subscribe.